Start.
Yeah. So good evening, friends. A very warm welcome to everyone from SIRC. We have today CA R. Subramanian. Sir, good evening, sir. Welcome to this evening's session. He is one of the leading GST consultants, practitioner who's always been generous about sharing his knowledge with us professionals, and he has again agreed to share his knowledge with us. He will be starting about the latest case laws and the GST amendments. I think the amendments, GST is one of the most dynamic laws. GST and IBC are the most dynamic laws in the country today, and there are so many amendments galore that it's extremely difficult for us professionals to keep pace with the thought processes of the governance bodies and the way in which the amendments and circulars and other things are included. So today I think he will be covering the rate change, then the late fees for delayed filing of GSTR 1, and the GSTR 2B is going to be auto-populated, and we have to validate it, to compute the eligible ITC, and then only we will see what is taken in the 3B, and then the penalty for wrong documentation, which is again one of the most impactful amendments which is going to come therein, for wrong documentation for goods which are in transit. The penalty is, I think, increasing from 100 to 200%. And I think there may be some more. I may have missed a few, but we will be walking us through the amendments and the recent judgments. Before I hand over the proceedings to Sir, I will just give a small introduction. And it's very interesting that we both went to the same faculty development program for GST, and Sir has conducted so many programs now, whereas I have taken a step back from GST, and so it's nice that I'm introducing my own classmate in this topic. He's a CA, Subramanian R is a BSc grad CWA. He's a chartered accountant and a law graduate, and he's been practicing since 1996. He has over 25 years of in-depth professional experience in direct and indirect taxes, and is the founder and senior partner of the firm Subramanian and Associates, which is headquartered at Chennai and has a full-fledged branch office at Bangalore. His area of specialization includes income tax and GST, besides the recently repealed legislations of service tax, central excise, central sales tax, and state VAT. He has delivered presentations in over 700 orientation seminars on GST, and he has addressed seminars on GST even prior to its introduction in July 2017. And he still continues to address the seminars and meetings regularly. And he also has a unique distinction of having trained the government and private sector employees on the nuances of GST. He regularly appears before all the direct and indirect tax authorities, including the CIT appeals, ITAT, CESTAT, and VAT tribunals. And he has also trained the GST officials of state and central government, and has also, as I think, diversified by being an accredited valuer with ICAI. He regularly addresses members and students in seminars and study circle meetings conducted under the auspices of the ICAI, ICWA, and the Company Secretary Institute, besides members of various chambers of commerce, associations, and other bodies representing the trade and industry. He has been selected as the GST faculty for the Institute of Chartered Accountants of India by the IDT, and he has contributed to the preparation and publication of the technical guide on annual return and GST audit brought out by the Institute of Chartered Accountants of India. So we cannot have a better speaker for today's program on the latest amendments and the latest judgments. Thank you very much, sir, once again for joining us and generously sharing your knowledge with us. We are all truly indebted to you. Thank you. Over to you.
Thank you, madam. Thank you. Thank you. Good evening to all. Respected Chairman, Mr. Jalabadi, sir, and Secretary, Mr. Pannaraj, sir, Regional Council Member, Madam, Madam, thank you for your kind introductions. And other organizers, thank you for giving me an opportunity to share my views, thoughts on latest amendment. What I am going to do is I am going to cover certain important amendment and circular, and also certain important issues that are cropping up while conducting an audit by the department. So these are all the broad discussions today. One is that audit issues. The second is the important amendment which is applicable from January 1, 2022, and then certain important circular which affects on our day-to-day activities. So these are all which we are going to discuss today. So let us go into one by one. The issue number one that I would like to discuss is GSTR 2A. ITC.
Sorry to interrupt. Screen sharing is not turned on.
Screenshot?
Screen sharing is not turned.
Yeah, 1 minute.
PPT.
Yeah. It's not sharing.
Screen sharing.
It's not sharing.
Right below the orange arrow, the third button, sir. If you click on that one, it will be.
It's not.
Yeah, now it's visible, sir.
Visible? You can see?
Visible, sir, please.
So the first issues that we are going to discuss is ITC mismatch. Form GSTR 2A, Form GSTR 3B. Say what is happening today at the time of audit. The adjudicating officer, the audit officer, first he find out what is your credit in GSTR 3B, and then he immediately see what is your credit in GSTR 2A. If your GSTR 3B is more, and if your GSTR 2A is less, then in such a situation, the officer, the audit officer immediately asking us, you please reverse a credit. You please reverse a credit. This is happening for 17-18, 18-19 and 19-20. So even sometimes audit officer says that this is a commissioner view, sir. So therefore you have to reverse it. You have no other choice. If you are not reversing it, then the officer says we will issue the show cause notice. So therefore, whether this reversal is required or not, that is the first question that we have to discuss today. According to me, no reversal is required. According to me, no reversal is required. No doubt you claimed input tax credit through GSTR 3B, and you reconciled with GSTR 2A. Your GSTR 3B is more than your GSTR 2A. Then even in such a situations, my view is that you are not required to reverse the input tax credit. One, the reason is that this 36(4) came into effective only from 9/10/2019. First, it came into effective only from 9/10/2019. The second very important is the GSTR 2A is not my return at all. The GSTR 2A is a department return. So therefore, it is not possible for me to each and every time to reconcile GSTR 3B with GSTR 2A. GSTR 2A with GSTR 3B. The third is the amendment is made in section 16AA with effect from 1/1/2022. So therefore, this amendment is came only from 1/1/2022. It should be communicated to the recipient through GSTR 2B. Until then, my view is that you are not required to reverse a credit. But the department insisting, in number of cases, the department insisting to reverse a credit because your GSTR 3B is higher than GSTR 2A. Moreover, the GSTR 1, 2, 3, these are all not at all in existence as on today. It is being suspended. So therefore, there is no mechanism for me to verify whether the other person filed the return, whether it is correct or not, whether there is a communication properly or not. So these are all absence. So in such a situations, my view is you are not required to reverse the credit which you have availed in GSTR 3B with the GSTR 2A. No doubt from 9/10/2019, the rule 36(4) came into effective. Rule 36(4) came into effective. It says that it should be communicated, and then another 20% is allowed. That means your GSTR 2A is 1 lakh rupees. Then Rule 36(4) says that you can claim more than 20%, and then it is reduced to 10%, then 5%. According to me, even as on today, the Rule 36(4) is not being backed by the proper section. So therefore, my view is that is not required to be reversed. So this is a issue number one. But there are a lot of show cause notices issued by the department saying that you have to reverse the credit. Even for 17-18 also, this GSTR 2A came into existence only in January 2019 and February 2019. Even the officer is insisting on a reversal even for the year 2017-18 and 18-19 also. So therefore, this is an highly litigated issues. My view is it is not required to be reversed. Whatever the view that I am going to express today here is all are my views. Therefore, I request you to kindly take your view after analyzing the law. So this is a point number one. Now let us go into the point number two. Point number two is GST on ex-factory supplies. What is this? Sir, assuming that a person, a dealer who is in Bangalore, assuming that a dealer who is registered in Bangalore, Karnataka, came into Chennai, purchased lot of furniture fittings and also purchased certain jewelries. Now, whether the dealer in Tamil Nadu, whether they have to charge you CGST, SGST or IGST is an issue which is going on. So my view is that whether it is CGST, SGST or IGST, first we have to check it up whether the delivery to the recipient is happened where. The delivery to the recipient is happened in the counter of the supplier in Tamil Nadu. It is in the counter of the supplier of the Tamil Nadu. So delivery happened in Tamil Nadu and the supply is also completed in Tamil Nadu. Sales is also completed in Tamil Nadu. The place of supply is in Tamil Nadu and the supplier is also in Tamil Nadu. So therefore, the view is that it should be only a CGST, SGST transaction. But there are views saying that no, sir, we are not able to find GSTR 1. If we give Karnataka GST number, it immediately it says IGST transaction. But you have to select properly the place of supply. If you select a place of supply as Tamil Nadu, then it will automatically convert into CGST, SGST transaction. But very important is, no doubt the dealer came from Bangalore and purchased a lot of goods. Whether that person is eligible to claim the input tax credit or not, it is not possible for him to claim the input tax credit because the dealer is in Karnataka. He paid CGST, SGST in Tamil Nadu. So therefore, you must be very careful while drafting the transactions or while entering into an agreement, and you have to be very careful. So therefore, without any agreement and based on some facts of the case, it is being concluded it is only a CGST, SGST transaction. So therefore, the other person is not eligible to claim the credit. So therefore, you must be very careful. Suppose the same person, same dealer from Karnataka came to Chennai. He purchased your furniture, fittings, gold, jewelries, everything. But he asked the concerned supplier, you please send me the goods to Bangalore. Then in such a situation, the goods is terminate for delivery to the recipient in Karnataka. So therefore, the place of supply will become Karnataka and the supplier is in Tamil Nadu. Therefore, it will become an interstate transaction. So therefore, you must be very careful whether it is CGST, SGST. If it is CGST, SGST, the other person is not eligible to claim the credit. Therefore, you must be very careful how to draft the transaction or how to enter an agreement with the concerned person in order to not avoid the input tax credit. So that is a point number 2. Now let us go into point number 3. This is also a very interesting issues. Registration under section 22, 23 and 24. See what is happening in section 22. All you know that if your aggregate turnover is more than 20 lakh rupees and if you are making a taxable supply, from where you are making a taxable supply, then you are required to get it registered under section 22. So 22 talks about the aggregate turnover and taxable supply. If it is exceeds 20 lakh rupees, then you are required to, in respect of your goods, you are required to get it registered. Then this limit is subsequently increased to 40 lakh rupees. But section 23 talks about if a dealer is engaged exclusively in exempted supply of goods or services. If a dealer is engaged exclusively in exempted supply of goods and services, then in such a situation, he is not required to get it registered at all. This is section 23. Now you come to section 24. 24 says, notwithstanding anything contained in section 22, the following person are required to get it registered. One is a person who is liable to pay tax under reverse charge mechanism. A reverse charge mechanism, either under section 9.3 or 9.4. So therefore, if you are liable under reverse charge mechanism, then in such situations you are required to get it registered, irrespective of the fact whether your turnover is more than 20 lakh rupees or less than 20 lakh rupees. Assuming that my turnover is only 10 lakh rupees, but I am liable to pay under reverse charge mechanism, then section 24 is applicable, not section 22. Then I am liable to get registered under the law, and I have to pay the tax. Now the question is, sir, a dealer who is dealing only in exempted supply of goods or services. Sir, he is engaged only in exempted supply of goods or services. He is exclusively engaged in exempted supply of goods or services. And he makes certain transport charges, GTA charges, to the tune of 20 lakh rupees. Assuming that his turnover is more than 1.5 crores or 2 crores, his turnover is 2 crores. There is a GTA expenses to the tune of 20 or 22 lakh rupees. And then there is a legal fee paid to the advocate to the tune of 1.5 lakh rupees. No doubt his outward supply is totally exempt. Now the question is whether he is required to get it registered. No doubt section 23 says if you are exclusively engaged in exempted supply of goods or services, you are not required to get it registered. But if you go through section 24, 24 says notwithstanding anything contained in section 22. It doesn't talk about 23, be careful. It doesn't talk about 23, it talks about only 22. So therefore 24 says notwithstanding anything contained in section 22, the following person are required to get it registered. A person who is liable under reverse charge mechanism. So therefore here no doubt the outward supply is totally exempt from tax, but the dealer is covered by section 24. He is liable to pay under reverse charge mechanism. So therefore he is required to get it registered. And he is required to pay the tax. No doubt he is exclusively engaged only in exempted supply of goods or services. Therefore, whatever the tax is paid under the reverse charge mechanism, he is not eligible to claim the credit. Now, the same example, assuming that instead of 2 crores, suppose the turnover is only 15 lakh rupees. Suppose the turnover is supply of goods is only 15 lakh rupees. Assuming that it is only a taxable supply of goods. Or services. No doubt the section 22 says only if the aggregate turnover exceeds 20 lakh rupees, he is required to get it registered. But here the turnover is only 15 lakh rupees. Therefore, he is not required to get it registered. In the same example, suppose assuming that there is a payment to the advocate to the tune of 1.5 lakh rupees, and there is a payment to the GTA to the extent of 4.5 lakh rupees. In such situations, what will happen? Whether he is required to get it registered or not. No doubt his aggregate turnover is less than 20 lakh rupees. But there is a certain payment is made by this person. There is a liability under a reverse charge mechanism under section 24. So therefore, he is liable to get it registered under section 24. He is liable. No doubt he is not required to get it registered under section 22 because his aggregate turnover is less than 20 lakh rupees. But he is required to get it registered under section 24. The reason is there is a liability under reverse charge mechanism. Once there is a liability under reverse charge mechanism, he is required to get registered. So once he gets registered, what will happen? Once he gets registered, no doubt he is liable to pay the tax under reverse charge mechanism on the legal fee paid and transport charges also. But you please check what will happen on outward supply. The outward supply, no doubt it is 15 lakh rupees. No doubt it is less than 20 lakh rupees. But you register under section 24. So therefore, you are required to pay the tax on the outward supply also, even though the aggregate turnover is less than 20 lakh rupees. Because Once you are registered under the GST law, you are required to pay the tax, file the return, etc. So therefore, in this case, no doubt the turnover is less than 20 lakh rupees. No doubt the turnover is less than 20 lakh rupees. But there is a liability under reverse charge mechanism. Therefore, you registered under section 24. Once you are registered, whatever your outward taxable supply, your outward taxable supply is only a taxable goods, no doubt, but less than 20 lakh rupees. Even in such situations, you are required to get it registered, and you are also liable to pay under reverse charge, and as well as on your outward supply. No doubt you are eligible to claim the credit on your reverse charge liability. You are eligible to claim the credit subject to section 16, 17, 18. So therefore, once you satisfy all the conditions, no doubt you are eligible to claim the credit also. So this is a next issues. Now these are all the another issue is that GTA and GTO. What is a GTA and what is a GTO? There is a more confusions. Even the officer in respect of small transport charges payments, he is asking us to pay under reverse charge mechanism. So therefore, if there is a GTA, good transport agency, and if the consignment notice issued and the person is responsible for taking the goods, then in such a situation it is a GTA. In such a situation, you are liable to pay under reverse charge mechanism. If it is a GTO, goods transport operator are not subject under your reverse charge mechanism. They are not taking any goods. They are not issuing any consignment notes. They are just shifting the goods from one place to another place, and they are not an agency at all. So therefore, in such a situation, GTO is not subject to a reverse charge mechanism. Therefore, you must be very clear whether it is a GTA or whether it is a GTO. So if it is a GTA, consignment notice is necessary. The second, the person should take the responsibility of the goods. He has to issue the consignment note. Even if the consignment note is not issued, there are other forms, whatever the document issued, that will be considered as a consignment note. There are decisions, pros and cons. There are certain decisions in favor of the assessee saying that once a consignment note is not issued, then it is not a GTA. And there are other views also is there, other decision is also there. So therefore, you must be very careful whether it is a GTA, whether it is a GTO. Once it is a GTA, no doubt you are liable to pay under a reverse charge mechanism. The next important is hotels in Tamil Nadu supplies services to SEZ in Tamil Nadu. Hotels in Tamil Nadu supply services to SEZ in Tamil Nadu. So therefore, the officer taking a view saying that, sir, hotels in Tamil Nadu supply to services to SEZ. Therefore, it will come directly under section 12.3 of the IGST Act says where the immovable property is situated. The immovable property is situated in Tamil Nadu. The supplier is also in Tamil Nadu. Therefore, CGST, SGST is applicable. Therefore, CGST, SGST applicable. This is a view of some of the officers saying that, but whereas the hotel is charged IGST, they are not accepting, and they are telling that no, sir, you pay the IGST now, you pay CGST, SGST now, you claim the refund IGST. So this view is also going on. There are certain advance ruling also says very clearly supply to SEZ is only a interstate supply. So hotels in Tamil Nadu supply services to SEZ in Tamil Nadu. Please go through section 7 and section 8. Section 7 and section 8 of the IGST Act. Any supply to SEZ, it will be considered as a IGST transaction. No doubt, there is corresponding section 12.3 of the IGST Act. It says that where the immovable property is situated, that is a place of a supply. So therefore, the place of supply is in Tamil Nadu. Hotel is also in Tamil Nadu. Therefore, it is a CGST, SGST. But what we have to do is we have to look into section 7, 8, and 12.3. So which is a specific section? Sir, according to me, section 7 and 8 is a specific section because it specifically says that any supply to SEZ is a interstate supply. So therefore, my view is that it is only an interstate supply. It is not an CGST, SGST supply. So therefore, what the hotel did in Tamil Nadu is correct, whereas the officer says it is only a CGST, SGST. So therefore, this issue is also going up in some important hotels it is going on. So this is my view is it is only an intrastate supply. My view is it is only an intrastate supply. Now the next issue is that prepaid AMC contract eligibility to claim ITC. Sir, in one case, what happened? In one case, what happened? The company entered an AMC contract on 20th March 2018. 20th March 2018, paid 75 lakh rupees plus GST of, say, assuming that 1 crore plus GST of 18%, 18 lakhs, and they received the invoices. They claimed the credit. The entire 18 lakh rupees, they claimed the credit. But the department says, sir, you entered an agreement only in 20th March 2018. This AMC contract is not at all related to this year. This AMC contract is related to the next year because 95% or 99% of the contract is related to the next year. Therefore, you cannot claim the credit for the year ended 31/3/2018. You can claim in the next year. So this is a view of the department. My view is that according to me, I received the service on 28th March 2018. I received the service. I entered an agreement. The agreement is, it is not possible for me to cancel the agreement. I paid the entire amount also. Therefore, I fulfilled all the condition on receipt of services. I received the service, no doubt. The service is going to be consumed over the period of time from April 2000 March, from April next March. So therefore, no doubt, I received the services. I received the services in March 2018 itself. So therefore, I am eligible to claim that credit. But the department is not accepting. The department says that this credit is not related to this year. This credit is related to the next year. Therefore, you are not eligible to claim the credit. I fulfilled all the condition in section 16. I fulfilled all the, say section 16 says on receipt of supply of goods or services. Once I entered an agreement, I received the goods, no doubt about it. I received the services, no doubt. He is obligated to provide the services from 20th March 2018 onwards. So therefore, I received the services. What I am doing is over a period of time, I am consuming the, based on the agreement, I am consuming the services. The Act says on receipt of services. The Act doesn't say that on the basis of the consumption of the services. So therefore, my view is I am eligible to claim the credit in respect of prepaid AMC contract. Even though I treated it as a prepaid expenses in my profit and loss account and the balance sheet, my view is it is eligible to claim the credit. So this issue also is going on. The next important is e-way bill for personal effects. Sir, in 1 or 2 cases, what happened? In 1 or 2 cases, what happened? When the goods are going from one place to another place, only the personal goods is being shifted. But the department says you have not raised the invoice and you have not raised the e-way, you have not generated the e-way bill. So therefore, I will impose section 129 and they impose a tax penalty extra. My view is that e-way bill, you are not required to generate the e-way bill for personal effects. You are not required to generate the e-way bill for personal effects. There is a specific rule. It says that for personal effects, you are not required to generate the e-way bill. The next contention of the department is, you have not, prepared the tax invoices. You have not prepared the tax invoices. I am an unregistered dealer. According to section 31, I am required to generate the tax invoices once if I register under the law. Every registered person who is required to issue the bill, he has to, every registered person is required to issue the tax invoices. So therefore, I am not a registered person as on the date. So therefore, I am not required to issue the tax invoices. But the department is not accepting. The department says that you have to generate the e-way bill and you have to prepare the tax invoices. This case is pending before the various commissioner appeals. My view is that for personal effects, no e-way bill is required and generating of tax invoices also is not required. So this is another issues. Now, additional place of business for ITC. So what happened in one case? The dealer is registered in Tamil Nadu and he is having a one place in Chennai. Another place is, very near to, Gindi. Yeah, another registered place, another place. This additional place of business is not registered. The dealer is registered under the GST law. The dealer is registered under the GST law, but his additional place of business is not registered. Wherein the additional places, lot of business is carrying on, the assessee is carrying on the business, generating the invoices, and he is also, doing a regular software development activities. Now the department raised the issue saying that this additional place of business is not registered. So therefore, whatever the credit is related to the additional place of business, that is required to be reversed. The reason is that this additional place of business is not registered. No doubt you are a registered dealer, but your additional place of business is not registered. Therefore, you are not eligible to claim the credit. So this is the audit department point. The audit adjudicating officer, they raise an issues. They send a notice. They send a notice saying that you are not eligible to claim the credit. But if you go through section 16, 16 says every registered person. So once you are registered, you are eligible to claim. The input tax credit. This additional place of business, no doubt you are required to get it registered. If it is not registered, it is only the general contravention. So therefore, the officer maximum he can levy the penalty under section 125. But in our case, the officer, what he did, he said that I will not allow you the credit at all. I will not allow you the credit at all. Then this matter is, we took to the higher authorities. Then the higher authority, they accepted it, saying that the dealer is registered, therefore the dealer is eligible to claim the credit. So therefore, eligible to claim the credit. For not registering the additional place of business, the officer levied a penalty under section 125, the general penalty. We paid the general penalty also. So therefore, the additional place of business, if it is not registered, even then you are eligible to claim the credit. Government contractor received the payment after 1/7/2017. So there are 7 or 8 cases in one particular senior intelligent officers. Before him, this issue came up. The issue is, he is a government contractor. He completed the contract prior to 1/7/2017. But after 1/7/2017, he received the payment to the tune of 20 crores from the Chennai corporations. 20 crores from the Chennai corporation. The department or the senior intelligent officer came for inspection. And he said, no, you received the payment after 1/7/2017. So therefore, you are liable to pay the tax, GST. They issued a summon, and they also, started asking the assessee to pay the GST on the payment received after 1/7/2017. So this is being explained to the assessing officer. The case is pending before the assessing officer. So in this case, very interesting is, even the department, the corporation, Chennai, they accepted that the work is completed prior to 1/7/2017. The assessee also raised the invoices before 1/7/2017. Only the payment is received after 1/7/2017. So therefore, my view is that the dealer is not required to pay, the GST on the payment is received after 1/7/2017. The issue is going up. The senior intelligent officer in Chennai, they visited almost 20-25 contractors, and they issued a summon also. So this case is now pending before the officers. So therefore, my view is that no GST is required to be paid, because it is liable only under the earlier act. The taxable event happened only prior to 1/7/2017. After 1/7/2017, there is no supply at all. For you to charge under GST, there must be a supply. Here, there is no supply at all after 1/7/2017. What I am doing is, I am receiving only the payment after 1/7/2017. My sales services, everything is happened prior to 1/7/2017. My taxable event is under the earlier law. So therefore, it is not subject to GST. So this issue is also going on. Now, fake invoices, all we know that fake invoices, the department, asking us to pay the tax on the outward supply, and as well as asking us to reverse the input tax credit. My view is that On the outward supply, they should not demand the tax, but however, they are demanding the tax. So this is also is a big issue is going on. Now we will come into some important. Now we will come into some important amendment. Some important amendment. Am I going fast, sir? Hello.
Yes, sir. Hello.
Okay, sir. Am I going fast?
No, sir, not much. Sir.
Huh?
You are correct.
Okay, right. Section 16(4), time limit for credit availment, effective from 1/1/2021. What is this? Under the old provisions, in section 16(4), a registered person shall not be entitled to take input tax credit. Shall not be entitled to take input tax credit in respect of, very important, invoice or invoice relating to such a debit note pertains or furnishing of the relevant annual return, whichever is here. So that means I have to check it up my debit note for whether my debit note related to which invoices. If the invoice, I have to link my debit note with the invoice. What is the due date for invoice? The same is also applicable for the debit note. So that is the old provision. Say for example, sir, I issued an invoice in the month of March 2019. In the month of March 2019, I issued one invoice. And then I am issuing a debit note in the month of October 2029. This old provision says your debit note related to the invoice March 2019. That March 2019, the last date for you to claim the credit is September. Whereas you have raised the invoices in the debit note in the month of October 2019. Therefore, the recipient is not eligible to claim the input tax credit in respect of that particular debit note. So this is the old provisions. So the old provision says that you have to check your debit note, whether the debit note is related to which invoice, and then you have to find out what is the last date, September of the following the end of the financial year, to check it out. If it is within the September, yes, it will be allowed. Otherwise, it will not be allowed. So this is the provisions under the old law. Now, what they did from 1/1/2019, that invoice relating to such a debit note is being removed. Invoice relating to such debit note shall be omitted. So therefore, what will happen? The same example. Sir, my invoice dated March 2019, 8/3/2019 is my invoice date. Whereas I raised a debit note in the month of November 2019. In the month of November 2019, I raised a debit note. Then in such a situation, the recipient in respect of the invoice March 2019, you have already claimed the credit. In respect of the debit note raised in October 2019 or November 2019, the recipient, he can claim the credit related to that debit note. So without any limit. So therefore, now invoice relating to such debit note shall be omitted. So therefore, the invoice and the debit note is totally delinked. Now the recipient, he can claim the credit based on the invoice, based on the debit note. Based on the debit note, he can claim the credit. So that is the provisions. So this is the example I explained. Now we'll come into very important circular. This circular talks about, blocking the input tax credit. Blocking the input tax credit. Sir, as per Rule 86A, the commissioner or the officer authorized by him can block the ITC if they have a reason to believe that ITC has been fraudulently availed by the following. So therefore, now the commissioner, he has a power, or the officer authorized by him has a power to block my input tax credit. Once it is fraudulently availed, very important. If the credit is fraudulently availed, then only the commissioner has a power to block my credit. Very important is reason to believe. So therefore, the reason to believe is sufficient. ITC has been availed on the basis of invoice issued by a non-existent supplier. Sorry. Or for supply which has not been received. So therefore, ITC has been availed on the basis of invoices issued by a non-supplier is not at all is available. So in such a situation, my ITC can be blocked by the commissioners. I didn't receive the supply at all, but I received the invoice. I am claiming the credit. Even in such a situation, the officer can block my ITC. ITC has been availed on the basis of invoice for which tax has not been paid to the governments. So I availed the credit based on the supplier, he issued the invoice. I availed the credit, but the other person he has not paid to the government. Third very important is the person who is availing the credit is non-existence or not conducting a business from the registered premises. So therefore, person availing the credit is not in possession of the invoices. In these circumstances, the commissioner, if he has a reason to believe that ITC has been fraudulently availed, then he can block my credit. Normally what happened, sir, only those credit which have been fraudulently availed, that alone can be blocked. But sometimes the officer, what they are doing, they are blocking the entire credits. Which is not correct. The second very important is no opportunity is required to be given to the dealer. If the commissioner has a reason to believe, then immediately he will write a satisfactory note and then immediately he will block my credit without giving me an opportunity. So these are all the circumstances. Then in such situations, what you have to do? You have to explain to the assessing officer saying that, sir, these are all the credit or valued credit. Or if you accept, you have to reverse the credit. But once it is blocked, it will be blocked for a period of 1 year. After 1 year, it will be automatically unblocked. But this automatic unblocking is not at all happening. In certain cases, the dealer, they have approached the court saying that even after 1 year, the department is not unblocking. There are decisions, even Gujarat High Court says that it should be blocked. I know once 1 year is over, it should be unblocked, but that is not happening. So therefore, you must be very careful in respect of the blocking the credit. This is applicable only if it has been fraudulently availed by the dealer. So therefore, that is very important. Fraudulently availed by the dealer. If it is not fraud, if it is genuine and bona fide, then you have to explain to the assessing officer, and you have to explain to the assessing officer. So this is a very important with effect from 29/12/2019. The next very important is the restriction on use of your input tax credit and mandatory payment of cash, Rule 86B. This is very important. Sir, I have a lot of input tax credit. I am utilizing the credit. I am not at all is required to pay any cash. The reason is I have more accumulated credit. But this Rule 86B says that, no, there are certain circumstances you are required to pay even though you have a accumulated credit balances. What it says, Rule 86B, it is applicable from 1st January 2021. It says that you can use your input tax credit only to the extent of 99% of your outward tax liability. Balance 1% you are required to pay. By cash, not by credit. No doubt you have accumulated credit. Even in such a situation, you are required to pay this 1% by cash. That is the Rule 86B. So that is the Rule 86B. So this rule is applicable only to the dealer, very important, only to the dealer whose taxable supply in a month exceeds 50 lakh rupees. So therefore, this is applicable only for a taxable supply. only for a taxable supply. That too exceeds in a month is exceeds 50 lakh rupees. Sir, my turnover is only 72 lakh rupees. In 1 month, my taxable sale is 51 lakh rupees. Even then, this rule is applicable. Even then, this rule is applicable. So therefore, one, there should be a taxable supply. The second, it should be exceed 50 lakh rupees per month. The third is important is this rule is not applicable for exempted supply and zero rated supply to SEs. So this rule is not applicable. So therefore, the rule says very clearly it is applicable only to the taxable supply. So therefore, there are certain exceptions given in this rule. There are certain exceptions given in this rule. First exception is, sir, if you are claiming a refund from the department, and if it is more than 1 lakh rupees, under the GST law, then this rule is not applicable. So therefore, I am claiming a refund. The officer is verifying all my documents, and then finally they are giving me a refund. And in such a situation, this rule 86B is not applicable. The second, I am claiming a inverted outward duty refund. Then even in such a situations, this rule is not applicable because I am claiming the refund under inverted duty structure. So therefore, this rule is not applicable. So the rule is not applicable. These two situations. The third very important is if the concerned person, if the concerned entity paying an income tax more than 1 lakh rupees. Say for example, in case of a proprietorship concern, if the proprietorship concern paying a tax of more than 1 lakh rupees income tax, then this rule is not applicable. Suppose in case of a partnership firm, what will happen? If the partnership firm pays more than 1 lakh rupees income tax, then this rule is not applicable. Sir, partnership firm is not paying 1 lakh rupees, whereas the partner is paying. If the partner is paying, at least two partner is paying more than 1 lakh rupees, even then this rule is not applicable. And the companies also, if the company is paying more than 1 lakh rupees income tax, this rule is not applicable. If the directors or whole-time director, managing director, if they are paying income tax more than 1 lakh rupees, then also this rule is not applicable. So therefore, what you have to do, no doubt you are not eligible to take the credit, even though you have accumulated credit, but your credit is restricted only 99% of your outward taxable liability. Say for example, I have one example. Say for taxable turnover during the April 2021 is 1 crore. My outward tax liability is, assuming that my rate is 18%, 18 lakh rupees. I have input tax credit of 20 lakh rupees in my books. I am not required to pay, by cash. But this act says you can claim only 99%. So therefore, 1% I cannot pay by credit. I have to pay by cash. So therefore, 18 lakh at the rate of 1%, 18,000 rupees. I have to pay by 18,000 rupees. I have to pay by 18 lakh rupees. So I have to pay by cash. So therefore, I can utilize only 17 lakh 82,000 rupees, 99%. Balance 18,000 rupees, I have to pay only by cash. But this is I have to discharge by using my e-cash ledger, no doubt. There is a credit balance in my credit ledger. I have to use it only by e-cash ledger. So this is rule 86. This is rule 86B. I have covered almost all important restrictions. Value of taxable supply, that is very important. Exclusions, which we have discussed. This is not applicable to exempted supply. The reason is it is applicable only to the taxable supply. And then the very important is the relaxation is linked with the payment of income tax. That is very important. Linked with the payment of income tax. Last 2 financial year, very important. In each of the last 2 financial years. So therefore, this 1 lakh rupees is to be paid in income tax more than 1 lakh rupees in each of the last 2 financial year. Then the person can utilize the full amount of ITC. So this is a very interesting amendment in rule 86B. The next important is whether this restriction on utilization is to be applied headwise or on aggregate basis. Sir, whether I have to apply for CGST, SGST or the IGST separately, or whether I have to aggregate. My view is you have to aggregate and then find out whether it is 99% or 1%, and accordingly you have to discharge your tax liability. Accordingly you have to discharge your tax liabilities. The next very interesting amendment, Section 16 to AA CGST Act Amendment. Section 16 to AA CGST Amendment Act. So we all know that for us to claim the input tax credit, we have to fulfill the conditions stipulated in Section 16.1 and Section 16.2. What Section 16.2 talks about? Section 16.2 says possession of a invoice, debit note, other prescribed tax paying documents. This is the first condition. So you must be the possession of the invoice or debit note. The second very important is the receipt of your goods or services or both. The third is tax paid by the supplier. The fourth is return is filed by the recipient. So these are all the conditions which you have to fulfill for you to claim the credit, for you to claim the credit under Section 16. But there is an amendment with effect from January 2022. It says another one condition, 16 to AA. So there is a insertion, Section 16A, and then immediately Section 16 to AA. This section is inserted with effect from January 2022. It says very clearly the detail of the invoice, very important, the detail of the invoice or debit note referred in clause A. What it is referred in clause A? Clause A is possession of invoice or debit note has been furnished by the supplier in the statement of outward supply. So therefore, one is it has been furnished by the supplier in the statement of outward supplies, and such details have been communicated to the recipient of such a invoice or debit note in the manner specified in Section 37. So that is very important. So therefore, one is it must be furnished by the supplier in the statement of outward supply. GSTR 1 he has to furnish, and then it should be communicated, to the recipient in the manner specified in Section 37. That is very important. So therefore, if this condition is fulfilled, then only you are eligible to claim the credit. Sir, no doubt, sir, he has furnished the return, but he has not communicated. It should be communicated. Once it is communicated, then only you are eligible to claim the credit. Otherwise, you are not eligible to claim the credit. Sir, simultaneously, Rule 36.4 is also amended. Very important. Section 16AA. That's why, you know, first I explained that until December 2021, even if my GSTR 3B is more than GSTR 2A, I am eligible to claim the credit because Section 16AA is came into effective only from January 2022. Until then, there is no restriction under Section 16 or 36.4. Therefore, I am eligible to claim the credit. So this is the view I am taking. So now the rule also is being amended. Rule 36.4. The Rule 36.4 came into effective from 9/10/2019. 9/10/2019. Then they fixed 20% and then another 10%, 5%. Now it is 0. Now it is 0. What Rule 36.4 says, very important. Input tax credit shall not be availed by a registered person. Very important. The input tax credit shall not be availed by a registered person in respect of invoices or debit note. In respect of invoices or debit note, the detail of such invoices or debit note have been furnished by the supplier in the outward supply in GSTR 1. So therefore, it has to be furnished by in the outward supply, and the detail of such invoices or debit note have been communicated to the registered person in GSTR 2B. So now it says GSTR 2B. Earlier there is no such communication. GSTR 2A, GSTR 2B, nothing was there in 36.4. So therefore, I am eligible to claim the credit. That is my view. But from 1/1/2022, it very clearly says that the detail of such invoices or debit note have been communicated to the registered person in form GSTR 2B. In form GSTR 2B. So therefore, from January 2022 onwards, whatever appearing in GSTR to be, that alone I am eligible to take the credit. Alone I am eligible to take the credit. No doubt, Rule 36(4) is not backed by Section 43A. 43A is not being effective as on today. These are all a separate litigation is that. Whatever I am expressing here is my conservative view. The view is that, so once it is communicated to GSTR to be, then only you are eligible to take the credit. Therefore, what will happen if it is not at all generated in GSTR to be? Say for example, my client, I purchase the goods from 4 or 5 dealers. All the dealers, they have not filed the GSTR1 within the due date. Then the particular month, no form GSTR2B will be auto-populated to me. I purchase the goods only from the 5 dealers. Those 5 dealers, they have not filed the return within the due date. So therefore, it will not be auto-generated in form GSTR2B. So therefore, I am required to pay the tax without claiming the input tax credit. The reason is it is not generated in my GSTR. It is not generated in my GSTR2B. Therefore, I am not eligible to claim that credit. I am not eligible to. No doubt, if they filed after the due date, definitely it will come into the next month of GSTR2B. Next month of GSTR2B. In the next month of GSTR2B, I am eligible to claim that credit. So therefore, I have to check it out whether it is there in the GSTR2B. If it is there in GSTR2B, I can take the credit. If it is not there in GSTR2B, I am not eligible to take the credit. What I have to do, I have to pay the tax. So therefore, this is the amendment from January 1, 2022. Section 16AA is properly amended, and Rule 36(4) also very clearly says that GSTR2B communication is through GSTR2B. So therefore, 36(4) is now at least backed by Section 16AA. So therefore, GSTR2B is very important for you to claim the input tax credit. Now, what is the impact of Section 16(2)AA? Section 16(2)AA very clearly says where invoice or debit note for which recipient wants to avail must be furnished by the supplier in the statement of outward supply, and it must be auto-populated in form GSTR. It must be auto-populated in form GSTR2B. So therefore, up to 9/10/2019, availment of ITC based on possession of invoice, because Rule 36(4) came into effective only from 10/10/2019. So from 10/10/2019, you are eligible to claim the credit based on GSTR2A plus 20%, and then provisional ITC of 110% from 1/1/2020, with effect from 1/1/2021. See, all are New Year gifts. From 1/1/2020, 10%, and 1/1/2021, 5%, and then 1/1/2022, ITC is restricted to GSTR2. Earlier 20% is allowed, and subsequently reduced to 10%, and then reduced to 5%, and then from 1/1/2022, whatever is the credit is there in GSTR2B, which you can claim, otherwise you cannot claim. So therefore, earlier Rule 36(4), 20, 30, all are become redundant. There is a specific rule now. Now my question is, sir, whether this is applicable from January 1, 2022. Sir, whether it is applicable for December month return, or is it applicable for even for January return? Be with me, sir, be with me. So whether this 36(4) rule, whether it is applicable even for a December 2021 return, or it is applicable only from January 2022 supplies. Sir, my view is it is applicable even for December 2021 return. Because in 1st January 2022, you are going to claim the credit. On the date of claiming the credit, the Rule 36(4) in your statute book. There is one Supreme Court decision. I am not able to remember immediately. I think Oram and Surya Private Limited. If my remembrance is right, the Supreme Court says very clearly on the date of claiming the credit, what is the rule? That rule is to be applied. Therefore, according to me, even this rule is applicable even for your December 2021 return. The reason is December 2021 return you are going to claim in January. In January GST or 2B, 3B you are going to claim. So therefore, that is a credit you are going to claim, and it will be credited to your electronic credit ledger. So therefore, the availment is happening in January 2021 to 22. Therefore, this rule is applicable even for your December 2021 return. The next question is, sir, my return, my GST or my supplier, he has filed GST or return of November or July 2021, September 2021, in January 2022. Sir, what will happen? So in such a situations, my view is that you can claim in January 2022 because it will come in your GST or 2B of January 2022, provided if it is filed within the due date. No doubt, it is related to July, August, September 2021, but the supplier is filing as on today. The supplier is filing in January 2022, so therefore it will be generated only in January 2022. So therefore, in January 2022, you can take the credit. You can take the credit. That is very important. But you have to also check it up very carefully. Whether you have taken more than 20%, 10%, these are also you have to verify. Sir, now I availed the credit. I availed the credit 20%, 10%, 5%. So these are all the dealers. They have not at all filed the return even as on today. And I know very well that they are not going to file the return also because they are not in existence. They are not going to file the return at all. That even in such situations, what will happen? My view is that those credit you are required to reverse it because the concerned person has not paid the tax. Section 16 2C is not being fulfilled. So therefore, those dealers, in respect of the credit, you have to reverse a credit. So therefore, first you have to, from January 2022, even for your December 2021 supply, you have to verify whether it is generated in 2B. Once it is generated in 2B, you are eligible to claim the credit. Otherwise, you are not eligible to claim the credit. In respect of old invoices, if it is filed in the month of January 2022, definitely it will come only in the GST or 2B. No doubt it will also come in GST or 2A because 2A is also there. What is the difference between GST or 2A and 2B? 2A is a statistic. 2B is a static. Whereas 2A will change because every month other person filing it will change. Whereas GST or 2B, once if you file within the due date, that alone will generate in GST or 2B. All other supplies which are all filed after the due date, it will come only in the next month of GST or 2B. Only it will come in the next month of GST or 2B. So therefore, you must be very careful with this. Now, let us have one small example. Impact of section 16 to AA. Sir, ITC as per books 1 lakh. ITC as per books 1 lakh. Eligible ITC as per GST or 2A 2B is 75,000. GST or 2A 2B is 75,000. Sir, from 1/7/2017 to 9/10/2017, I can take whatever the credit in my books, in my GST or 3B, I am eligible to take credit. The reason is there is no restriction at all. Only the restriction is section 16. Rule 36(4) came into effective only from 10/10/2019. So therefore, up to 9/10/2019, I am eligible to take the credit as per GST or 2A. As per my books and as per my GST or 3. Whether it is reflected in GST or 2A or not, I am eligible to take the credit because there is no restriction at all in the section. But from 10/10/2019 to 31/12/2019, Rule 36(4) came into effective from 10/10/2019, and it says you are eligible to take the credit 20% plus whatever appear in GST or 2A. So therefore, 75,000 rupees my credit in GST or 2A and 20%, 15,000 rupees. I am eligible to take the credit up to 90,000 rupees. From 1/1/2020 to 31/12/2020, I am eligible to take 110% of GST or 2A. From 1/1/2021 to 31/12/2021, 105% of GST or 2A. 105% of GST or 2A. So that means 75,000 plus 5%. I am eligible. from 1/1/2022 onwards, 100% of GST are 1/1/2021 onwards, sorry, 1/1/2022 onwards, 100% of the GST are to be, I'm eligible to take the credit. If it is not there in GST or 2B, I am not eligible to take the credit. I am not eligible to take the credit because section 16(2)AA is amended, 36 rule 4 also is amended, but there are other litigation is also going on. The other litigation is 36(4) is not backed by section 43A. These are all litigated issues which we have to wait and see. So therefore, from 1/1/2022, I have to verify what is there in GST or 2B. If it is there, I am eligible to take the credit. Otherwise, I am liable to pay the tax. I am liable to pay the tax. Now, if you go through section 16(2)AA, section 16(2)AA, it talks about only invoices or debit notes. It talks about only the invoices or debit. So therefore, the credit note is not covered by section 16(2)AA. The credit note, the supplier only has to issue the credit note. So he will issue the credit note. The recipient he has to reverse the credit. Based on the credit note, I am not going to claim any credit. In fact, I have to reverse a credit. In fact, I have to reverse a credit provided if the credit note is issued under the GST law. If it is not a credit note under the GST law, if it is a financial credit, then the position is totally different. So therefore, if it is a credit note, then in such a situation, the supplier he has to reduce his outward supply. The recipient, what he will do, he will reverse the credit to the extent the supplies he has reduced the outward supply. So that is section, that is a credit note. So therefore, 16(2)AA is not applicable for credit. The next important is bill of entry for import of goods. Sir, bill of entry for import of goods is not an invoice or debit note is being issued by the supplier. So therefore, bill of entry for import of goods is not applicable for section 16(2)AA. Section 16(2)AA is not applicable. Distribution of the credit note based on the input service distributor. Sir, input service distributor is distributing the credit, but he is not distributing the credit based on the invoice or debit note. So therefore, the distribution of the credit based on ISE section 16(2)AA is not applicable. ITC availed under reverse charges, even then ITC availed taxpayer and reverse charge, even 16(2)AA is not applicable. Even section 16(2)AA is not applicable. So therefore, from that it is very clear that section 16(2)AA is applicable only in respect of invoices or debit note, which are all uploaded by the supplier, is applicable. Credit note, bill of entry, distribution of the credit, ITC availed under reverse charge mechanism, that section 16(2)AA is not applicable. So this is very important. The next important is discussed. Gstr 2B is a static report. Once the supplier has furnished his Gstr 1, 5 or 6 return on time, then automatically it will be generated in Gstr 2B. If he is not filing within the due date, if he is filing after the due date, then it will come into the next month. That's all. Then it will come into the next month. So input tax credit can be availed only in the month in which the return is furnished by the supplier based on the amended provision of section 16. Read with rule 36. So therefore, that is very important. Suppose if the supplier has not furnished the return, Gstr 1, 5, 6, he has not at all furnished it, then auto population will not happen in Gstr 2. Auto population will not happen in Gstr 2B, but it will be there in Gstr 2A. There in the Gstr 2A. But 1/1/2022 rule 36 for very clearly says it is on Gstr 2B. It doesn't talks about Gstr 2A. It doesn't talks about Gstr. The next very important is what is form Gstr 2B, which we all discussed. It is only a static statement. It indicates what is the input tax credit is availed and what is the credit is to be required to be reversed. It will be available on 14th day of the succeeding month, so that you can file your return on 20th through form Gstr 3B. So therefore, it is a static statement. It won't change like Gstr 2A. So particular month it will be there. That's all. Even after 3 years, the same input tax credit will be there in form Gstr 2B. It won't change. It won't change. These are all we discussed. Now, what is the strategy which we have to adopt for filing a Gstr? Sir, I am one type of a dealer. I am not bothered about Gstr 2A, Gstr 2B. I am not bothered about 2AA amendment, rule 36(4). whatever in my books of accounts, whatever the invoice I'm having, whatever the entries I made in my books of accounts, I will claim the ITC. This is one type of a dealer. I will claim ITC. I am not bothered about section 62A. Sir, invoice is, sir, I recorded in my books of accounts. Therefore, I am eligible to claim the credit subject to fulfillment of all the condition in section 16. I fulfilled all the condition. So, if you go through section 16, all the condition you cannot fulfill at the time of filing the return. There are certain conditions which you can fulfill only post filing of Gstr 3B. Post filing of Gstr 3B. So, therefore, this type of a dealer always says that I will claim the credit, whether it is Gstr 2A, 2B, I will claim based on entry record in the books of accounts and availability of my invoices. Sir, this type of a dealer be ready with 18% for mismatch and as well as for interest and as well as for 80% interest for mismatch bills. Because Gstr 2B will be generated, the officer will come and verify, sir, your 3B is more than 2B, therefore why don't you reverse the credit? Why don't you pay me the interest? So therefore, this is, I am not at all is, advising this type of dealers. I am not advising this type of dealers. The second type of dealers, they are very good. They say, sir, I will claim Gstr 2B, sir. That's all, sir. Whatever there in Gstr 2B, I will claim. No mismatch, sir. My 2B will tally with my Gstr 3B, will tally with my books of accounts. Whatever there in 2B, I will record in my books of accounts. I will claim my Gstr 3B. I am very happy, dealer, sir. So therefore, whether this is correct, this is also not correct according to me. Because whatever there in Gstr 2B, there are certain ineligible credit will also be there. There are blocked credit will also be there in Gstr 2B. So therefore, I am not suggesting this. The reason is this also, subject to, department notice and the interest at the rate of 18%. Maybe certain blocked credit may be there in Gstr 2B. There are certain credit not at all related to you. The other person, you have filed wrongly. You have filed wrongly. So therefore, that is also is possible. That is also is possible. So therefore, this dealer is also subject to, departmental notices and interest also at the rate of 18%. So therefore, this will be very difficult. The third type of a dealer, sir, I claim ITC only after bill-wise reconciliations. Sir, this type of a dealer, they are a law compliant method. They can provide the data immediately to the department, and no doubt it is a time-consuming process. It is a time-consuming process, tedious process. There are lot of accounting issues involved, but when the department asks, you can immediately provide the details. So this is a third type of a dealer. I am recommending this third type of a dealer. I am not in favor of first. I am not in favor of second also. Second also, I have an issues. Blocked credit will be there, ineligible credit will be there, credit which are not at all related to me. The other person filed wrongly. That credit also will be there in Gstr 2B. So therefore, that is very important. The next important is, sir, why there is a difference between Gstr 2B with respect to books of accounts? What would be the reason? What would be the probable reason for the difference in Gstr 2B with respect to books of accounts? Sir, bills are not appearing in the Gstr 2B, whereas it is appearing in the books. Sir, I purchase the goods. Sir, I recorded my books of accounts. It is there in my books of accounts. But the person who supplied the goods, he has not filed the return. Therefore, it is not there in Gstr 2B. Therefore, it is not there in my Gstr 2B. But it is there in my books of accounts. So therefore, this is the reason for difference in Gstr 2B. The next thing important is, so this is the second one is wrong. Bills are appearing in the Gstr 2B, not appearing. That is not correct. Bills are appearing in the Gstr 2B, whereas not appearing in the books of accounts. This is very, very important. Sir, it is there in Gstr 2B. But it is not there in my books of accounts. What would be the reason? The reason is invoice I received, but the accounts department not received the invoice. Whereas the supplier, he has filed the return and he has also communicated through Gstr 2B. So therefore, it is there in Gstr 2B, but it is not there in my books of accounts. Therefore, what I have to do, I have to verify whether this credit belongs to me, one, whether this credit is related to me, one. The second thing is I have to verify. Whether this credit, whether why it is not appearing in my books of accounts. Therefore, I have to reconcile and I have to find out where is the invoice. So this is the second situation. The third situation is detail of bills as per GST are to be and the books are not matching. Sir, invoices it is there 1,22,000 rupees. Whereas I recorded my books of accounts 1,12,000 rupees. I recorded my books of accounts 1,12,000 rupees. Or invoices it is there only 12,200. Whereas when I record my books of accounts, I recorded 1,22,000 rupees. So therefore, there is a difference between GSTR 2B and GSTR in my books of accounts. Therefore, I have to find out what is the difference between my GSTR 2B and what is in my books of accounts, and then I have to verify whose fault, whether it is your party faults or is it my fault or whether I have properly recorded the transaction or not. That is very important for us to find out each and every month to be reconciliations, each and every month. The next important is party has not filed the GSTR1. Party default. Party has not filed the GSTR1. So therefore, it is not there in GSTR2B, but it is there in my books of accounts. Sir, party has filed GSTR, but he has not filed within the due date. He has filed after the due date. So therefore, what will happen? It will be there in my books of accounts this month, but it will not be there in GSTR2B. But next month it will be there in GSTR2B, but it will not be there in my books of accounts. Be with me. It will not be there in my books of accounts. So therefore, I must be very careful. So I have to do the reconciliation also. Say for example, in one case, what happened? Sir, the dealer, he filed the return. Sorry, the supplier, he has filed the GSTR1 in the month of September 2021. In the month of September 2021, he has filed the GSTR1. But what happened in my case? The goods is received only in January 2022. So therefore, while claiming the input as credit, I have to fulfill section 16. Section 16 says on receipt of the goods, the receipt of the goods happened only in January 2022. Therefore, I claimed the credit in January 2022, but it will not be there in January 2B. It will not be there in January 2B because it is a return filed in the month of September 2021. Therefore, it will be there in my September 2021 GSTR 2A. It will not appear in GSTR 2B at all. It will not appear in GSTR 2B at all. Whereas I am claiming the credit in the month of GSTR 2B, in the month of January 2022, I am claiming the credit because no doubt, the invoice is dated September 2021. The invoice is dated September 2021. And the dealer is filed the return in September 2021. It is appearing in GSTR 2A in September 2021. But I am claiming I received the goods only in January 2022. Therefore, I am claiming in January 2022. Whereas in January 2022, 2B, it will not be there. So therefore, you must be very careful. Only it's not available in current month. So third, I have explained. Party has not filed the GSTR 3B of previous month. So once if you are not able to file GSTR 3B of previous month, then you cannot file your GSTR 1 for the current month. That may be the reason also. So therefore, the party may have entered a wrong GSTR. Instead of Subramanian and Associates, they have to file Subramanian Associates. Both are the parties, dealers. So therefore, he has wrongly punched the GSTR. That will also happen. So therefore, it will go to some other persons. So that is also possible. So therefore, that also you have to examine. The next is not recorded in the books of accounts. I think which we have discussed this probable reason for not recorded in the books transaction. All bills are not booked. I have not booked at all. Are booked, but GST is not being shown separately. I have had everything as an expenditure, or I have had everything as an assets. Party has shown the supply, but customer has not received the goods. I explained to you, goods in transits. The bill is recorded in the books in the previous month. This also I explained to you. So therefore, there are probable reason for not recording the books of the transaction also. That also you have to verify. Now let us see one case study. Mr. A sold the goods to Mr. B. on 5th September 2021 and reported the same in GSTR1 of September 2021 on 10th October 2021. The said bill is accounted in the software of Mr. B in January 2022, since goods are received by Mr. B in January 2022. So therefore, A sold the goods in the month of September 2021. Therefore, he has filed his GSTR1 in 10th October 2021. Therefore, it is communicated to GSTR2A. At point of time, only GSTR2A. Therefore, it is there in GSTR2A. But B, he has not received the goods at all. He received the goods only in January 2022. He received the goods only in January 2022. He cannot claim the credit in September 2021. The reason is he has not received the goods. One of the condition he has not fulfilled. So therefore, the goods is received in January 2022. So therefore, now B taking the credit in the month of January 2022. He taking the credit in the month of January 2022. But in January 2022, will it appear in GSTR2B? No, it won't appear in GSTR2B because the dealer already filed the return in September 2021. Therefore, it will be there in September 2021 GSTR2A. It will not come GSTR2B. But when you are taking the credit in GSTR3B, it shows red color. It shows a red flag. Even then, my view is you are eligible to take the credit. You are not eligible to take the credit in the month of September 2021. But the time limit is there. Say for September 2021, you can claim before September 2022 monthly return. Due date, that means October 20th. So therefore, you can take the credit up to 2022 October. So you can take the credit. So here Mr. B took the credit in the month of January 2022. In January 2022, he received the goods. So therefore, he is eligible to claim that. So Mr. B eligible to claim the credit in the month of January 2022, even though it is not reflected in GSTR2B of January 2022. The next important is GSTR1 filed after due date of claiming in ITC. Sir, for January 2022 return, I am filing on 25th October 2022. The return is not filed within the due date as per section 16 subsection 4. Therefore, you are not eligible to claim the credit. So now we will go into the, so we discussed in length about section 16 to WAA and read with rule 36.4. Now we will go into some other important amendment. The very important amendment is one, consequences of non-filing of GSTR3 for a particular month. What it says, rule 59 is amended. It says the said person will not be able to file GSTR1 for the next month period. So that means you have to file a GSTR3B. If you have not filed the GSTR3B for a particular month, you cannot file GSTR1 for the next month period. So if the person not filed GSTR3B for December, he will not be able to file GSTR1 for January. He will not be able to file January 1. So therefore, what we did, we are all very happy. We will file only GSTR1 alone. The reason is that no tax is required to be paid. So therefore, we don't want to get any, complaint from our client, from vendor. So therefore, we will immediately file GSTR1. We will not file GSTR3B at all. The reason is for filing GSTR3B, you have to pay the tax. So therefore, we will not file GSTR3B. And then whenever, time permits or funds available, then only we will file GSTR3B. So this is noticed by the department. The department now amended. The government now amended. It says that you have to file GSTR3B. If you are not able to file a GSTR3B for a particular month, you cannot file GSTR1 in the next month. So that is a very important amendment. The next amendment is the difference in GSTR1 vs GSTR. This is also one of the planning by the dealers. What they will do, they will show whatever the turnover, correct turnover in GSTR 1, so that the person, the vendor will get the credit. So there won't be any issues at all. While filing GSTR 3B, what we will do? We will file GSTR 1 5 crores. When it comes to GSTR 3B, we will show 1 crore. The reason is if you show 5 crores, you have to pay the tax. Output minus input, you have to pay the tax. We will not show it. We will show only 50 lakh rupees, 75 lakh rupees, and then we will file GSTR 3. GSTR 1 will go on 5 crores, GSTR 3 will go 50 lakh rupees. If the department asks why there is a difference, no, sorry, issue the show cause notice. I will explain the difference between GSTR 3B and GSTR 1. You cannot just like that, you cannot recover the tax. You have to give me an opportunity. You have to issue the show cause notice. And I will explain the positions. All the dealer took a stand. Now what it says? Now this amendment, what it says? Sir, if there is a difference between GSTR 1 and GSTR 3B, it will be considered as a self-assessed tax liability. Because you are only filing a GSTR 1. You are only filing a GSTR 1. And you are only filing a GSTR 3. Now, if there is a difference between GSTR 1 and GSTR 3B, the Act says, the section says it will be considered as a self-assessed tax liability. Sir, once it is a self-assessed tax liability, no show cause notice is required to issue. No show cause notice is required to issue. The officer straight away go under section 79 to recover the tax. Even he can start the garnishing proceedings. So therefore, if there is a difference between GSTR 1 and GSTR 3B, it will be considered as a self-assessed tax. The officer can recover the tax as unpaid self-assessed tax. Unpaid self-assessment tax. The recovery procedure is started according to section 79. Be with me. No necessary to issue the show cause notice. Not necessary to go so section 73, 74. No necessary to issue the show cause notice. Why we are asking the show cause notice? And the officer will take another 3-4 months. So therefore, the Act says no necessary to issue the show cause notice. It will be considered as a self-tax liability. So therefore, the officer gets recovery power under section 79. Gets recovery power under section 79. Sir, sometimes what will happen? Genuinely, we would have made some typographical mistakes. Then in such a situation, there is a circular. The circular says, you please give an opportunity to the assessee and ask him to explain why there is a difference. If the reason is a bona fide, and if it is only a typographical mistakes, then in such a situation, officer should not resort to recovery procedure. Under section 79. So this is also a very interesting amendment. So this I will discuss detention and seizure section 129. This I will discuss later because it will take more time. Now retrospective amendment in section 71WA. What is section 71WA? All you know what is section 71A. What is supply? Supply includes sale, transfer, barter, exchange, license, lease, rental, or a consideration by a person in the course or furtherance of a business. What is section 71WA? Sir, 71WA, there is an amendment with retrospective effect from 1/7/2017. Sir, section 16WA amendment is only from 1/1/2022. Whereas this amendment, section 71WA amendment is retrospective effective from 1/7/2017. 1/7/2017. Sir, there is a Supreme Court decision, Calcutta Club. There is a Supreme Court decision. The Supreme Court says under the erstwhile law, under the service tax law, under the VAT law, it says the members and the club are one and the same. Members and the club are one and the same. Therefore, you cannot levy service tax. You cannot levy the VAT under the erstwhile law. Therefore, what we did, we took that decision. We discussed the decision in length, and we applied the same under the GST law. Therefore, the clubs and association, incorporated or unincorporated association, took a stand saying that whatever the decision rendered under the erstwhile law, Calcutta Club, is also applicable under the GST law. Therefore, the languages used are the similar, And the members and the club are one and the same. Members and the clubs are one and the same. Therefore, the provisions of that Supreme Court decision is also applicable under the GST law. Under the GST law. So therefore, the club is not paid the GST. Certain clubs, some of the clubs, what they did, they collected and paid the tax. In some of the clubs, they took a stand saying that Calcutta club is applicable to me. Calcutta club says that members and the association or club are one and the same. Therefore, no tax can be levied. The same is also applicable under the GST law. Therefore, I am not required to pay any tax, any GST under the GST law. Under the GST law. So this is a stand is took by some of the club or some of the society or associations. Now, what it says this section? This section says that, very interesting. This section says that for the purpose of this class, it is hereby clarified that notwithstanding anything contained in any other law for the time being in force, or any judgment, Calcutta club, degree or order or any court, tribunal or authority, the person and its members shall be deemed to be a two separate person, and the supply of activity or transaction shall be deemed to be take place from one such a person to another person. So therefore, now section 71WA says with retrospective effective, the members and the club are two different persons and shall be deemed to be take place. Supply shall be deemed to be take place from one such a person to another such a person. So therefore, it will be a supply under section 71WA. It is retrospective effect. So therefore, it will be applicable from 1/7/2017. So this is a judgment under this is an amendment under section 71WA of the CGST Act. So therefore, some of the club now they are facing an issue. One, this is applicable from 1/7/2017. So therefore, they are liable to pay from 1/7/2017. The next question is whether they can claim the input tax credit. They cannot claim the input tax credit. The reason is that the time period for claiming the credit is gone. The time period for claiming the credit is gone. So therefore, they cannot claim the credit. The third, whether they are liable to pay the interest. My view is they are liable to pay interest, except one or two decisions are there. So therefore, they are liable to pay the interest subject to litigation. So therefore, the clubs now liable to discharge their liability from 1/7/2017 onwards, and they are not eligible to claim the credit, input tax credit, and they are liable to pay the interest also. They are liable to pay the interest also. So that is in respect of 71WA amendment. This is in respect of 71WA amendment. So therefore, and then what they did, they also removed schedule 2 item number 7. What it says, item number 7, supply of goods by any unincorporated association or body of person to a member thereof for a payment or other valuable consideration shall be a supply of goods. So they removed this. So they don't want to get into issue of unincorporated, incorporated association, whether it is supply of goods or supply of services. Therefore, they have amended 71WA, and simultaneously they have also removed schedule 2 item number 7, so that you will be governed by section 71WA. Section 71WA. You will be governed by section 71WA. Therefore, the clubs, societies, they are subject to GST from 1/7/2017. This is a far-reaching amendment. No doubt there are a lot of representations gone to the government saying that please allow us to take the credit. My view is then even then they cannot the credit. The reason is that if it is a 5% category, they cannot take the credit. Therefore, it is subject to we have to verify the facts of each and every club, and then you have to find out whether they are eligible to claim the credit. There are a lot of representation gone to the government. There are certain representation gone to the government. You please waive the interest also. So therefore, this we have to wait and see. So then the next very important. This also once I covered 129. I will cover this. Now, amendment to section 83. Provisional attachment to protect the revenue in certain cases. Now, what they did, they have widened the powers. Say earlier, what happened? Say earlier, before 1/1/2022, attachment to protect the revenue in certain cases is possible only in case of the assessment of a non-filers of return, section 62. Assessment of unregistered dealer, section 63. Summary assessment, section 64. inspection and search and seizure, section 67, demand under section 73 or 70. These are all the cases only the provisional attachment is possible before 1/1/2022. There are various judgments. It says that unless otherwise, if the proceeding is pending under the above provisions, then only you can attach the property. Otherwise, you cannot attach. There are a lot of decisions here. But now what the government is did with effect from 1/1/2022. Even self-assessed tax, sir, please be careful. Self-assessed tax, section 59, self-assessed tax. So there is a difference between GSTR1 and GSTR3B. It will be considered as a self-assessed tax. Even if the self-assessed tax is not paid, the government have a power, the department have a power to attach your bank account, to attach your property, Be careful. So therefore, self-assessment is now governed. Earlier is not governed. Provisional assessment, earlier is not governed. Now provisional assessment. I am passing a provisional assessment. If the officer feels that in order to protect the revenue, if he wants to attach, he can attach the property of the dealer. The next very important is scrutiny of returns. Scrutiny of a return. Section 61. While scrutinizing the return, while sending a ASMT 10, there are certain details called by the assessing officer. If the assessing officer feels, to protect the interest of the revenue, he can attach the property. So assessment of non-filer, it is already there. 63 already there. 64 is also already there. 67 is also already there. Now you see inspection of the goods in movement. Section 68. When the goods are in movement, sir, the goods is not supported by proper evidences, not supported by e-way, not supported by proper documents, and even in such a situation, sir, summon under section 70, sir, issued a summon to call for the books, to call for the records. If the officer has a reason to believe, and in such a situation, he can attach the property. Property includes bank account also. So therefore, now the power is being widened. Enlarged. So therefore, the officer has got a power. These are all very important. Now, Rule 10B Aadhaar authentications. Sir, Aadhaar authentication, now it is mandatory. Every registered person shall undergo a authentication of the Aadhaar number. In case of a proprietorship, the proprietor has to go. Company MD, whole-time director, HEF Karta, trustees, partnership firm partner, AOP members, or authorized representatives. Aadhaar authentication, if it is not done, the assessee will not be eligible for filing an application of revocation of cancellation. So therefore, if you want to revocation of the cancellations, it should be Aadhaar authenticated. Filing of a refund application. Filing and refund application is also, this is required. Refund under Rule 26, that is integrated tax paid on export of goods. For that also, this Aadhaar authentication is very important. So these are all the three situations. Aadhaar authentication is mandatory. So therefore, that is also applicable from January 1, 2022. Yes. So this is not much. This is very important. Changes in case of e-commerce operators. So the e-commerce operator, they are liable to pay tax under section 9(5) of the CGST Act. CGST Act very clearly says that e-commerce operator, they will be considered as a supplier of your services. Uber and Ola, the e-commerce operator, they are liable to pay the tax. Now it is increased. Uber, Ola, e-rickshaw, auto rickshaw, these are all now included in the e-commerce operator. The e-commerce operator, they are liable to pay the tax. Other vehicle is also included. No doubt, it is through an electronic commerce operator. The rate of tax is 5%. E-commerce operator, they will be considered as a supplier of service. A person who is supplying through e-commerce operator, they are not subject. Only the e-commerce operators, they are required to get it registered and they are liable to pay the tax. Earlier meter caps and meter caps and other Ola, Uber are covered. Now, including the e-rickshaw is covered. there is one High Court, High Court writ to be, I think Uber or Ola, a person they have filed a writ before the Delhi High Court. The reason is the e-rickshaw is exempt in the exempt category. But however, this notification says if you are supplying through the e-commerce operator, the e-commerce operator is liable to pay the tax at the rate of 5%. This is against Article 21, 14, 19, 1G. So therefore, there is a one writ petition is pending before the Delhi High Courts. So therefore, which we have to write. Now all the vehicles e-rickshaw is covered through e-commerce operator. The e-commerce operator, they are required to discharge the liability. The liability is at the rate of 5%. The next is very important is e-commerce operator restaurant services. E-commerce operator restaurant services. Sir, restaurant services, if it is not in a specified premises, they are liable to discharge the tax at the rate of 5%. They are liable to discharge the tax at the rate of 5%. No input tax credit because it says very clearly 5% without input tax credit. So therefore, they are liable to pay at the rate of a 5%. Suppose if the restaurant, very important, restaurant other than located at a specified premises. Specified premises means having a tariff rate of more than 7,500 rupees. Having a tariff rate of more than 7,500 rupees. So those restaurant, they can charge and they can pay on their own. But other than located at a specified premises, the e-commerce operator, they are required to pay the tax. They are required to pay the tax. Therefore, very interesting is Saravana Bhavan or Sangeeta or any other hotel providing a restaurant services through e-commerce operator. Through e-commerce operator, only the e-commerce operator, they are liable to collect the tax and pay to the government. Not to the restaurant. So the restaurant, they have to pay their own outward supply. But if they are supplying through the e-commerce operator, only the e-commerce operator are liable to pay the tax. Sir, if you go through section 9.5, 9.5 also very clearly says that the e-commerce operator, they will be considered as a supplier of service. And all the provision which are all applicable to the supplier of service is also applicable to the e-commerce operator. So therefore, they are required to file the return. They are also required to pay the tax. They are required to collect the tax. So therefore, now from 1/1/2022, only the e-commerce operator. But if you go through some magazines, they say that no, restaurant services is going to be costly because the e-commerce operator, they are going to charge the tax. No. Once the e-commerce operator, they are charging at the rate of 5%, the hotel will not charge. The restaurant will not charge. The restaurant will supply the goods to e-commerce operator. E-commerce operator in turn supply to the consumer, and they will collect the rate of 5%, and they will remit to the government. So therefore, the next question is, sir, whether e-commerce operator, they can claim the input tax credit. E-commerce operator, say the circular also very clear, they have to collect the rate only at the rate of 5%. Whatever the rate is applicable for restaurant, that is also applicable to the e-commerce operator. So therefore, the tax rate is only 5%. Once it is 5%, the e-commerce operator, they are not eligible to claim the credit because the rate of tax is 5%. This 5% is without input tax credit. Therefore, they are not eligible to claim the credit. So therefore, the e-commerce operator, they will collect the tax and remit to the government. The next question is, who will raise a tax invoice? Whether the hotel, whether the restaurant, when they are supplying the goods to e-commerce operator, whether they have to raise a tax invoice, or whether the e-commerce operator, when they are supplying to the consumer, they have to collect the tax invoices. The circular, you please refer the circular number 167. I think 16/12/2021, the remembrance is right. That circular says very clearly, it clarified a lot of points. So it says that the e-commerce operator, they are required to issue the tax invoice, and they are required to collect the tax and remit to the government. Then what will happen to the restaurant? The restaurant, in their hands, it is not a taxable supply. It is a taxable supply in the hands of an e-commerce operator. It is not taxable supply in the hands of a restaurant. Therefore, the restaurant will issue the bill of supply. The restaurant will issue the bill of supply to the e-commerce operator. The e-commerce operator in turn, issue the tax invoices to the customer and collect the tax and debit the tax. Suppose if the e-commerce operator having a lot of other credits, can they use those credits? With respect to this restaurant services? No, they cannot use it. The reason is that the rate is 5%. Once the rate is 5%, the 5% is without input tax credit. Therefore, the e-commerce operator, they are not eligible to claim the credit. Suppose if the e-commerce operator having other operations also, they are operating on commission basis, they are receiving a lot of commissions, and they are also outsourced a lot of services. Whether they can claim the credit in respect of other operations, my view is in respect of the other operation, they can claim the credit. They can claim the credit because it is their taxable supply, so therefore they can claim the credit. Now you come to restaurant side. Restaurant, when they are supplying the goods to the e-commerce, whether it is a taxable, whether it is exempted, or whether it is non-taxable, in the hands of a restaurant. The restaurant going to issue only the bill of supply. So the restaurant, they have to show it as a exempted supply. The restaurant, they have to show it as a exempted supply. That is a circular also clarify. The circular says that the restaurant, they have to show it as a exempted supply. So therefore, GST on restaurant services other than located at specified premises provided by e-commerce operator is at the rate of 5%. E-commerce operator, they are not required to collect TCS because they are paying the tax, entire tax. In respect of other supply, according to section 52, they are required to collect TCS. But in respect of restaurant, they are paying the tax. In respect of Ola, Uber, they are paying the tax. Therefore, they are not required to collect TCS. But in respect of other supplies, other supply of goods, they are required to collect TCS. Next, e-commerce operators shall pay the entire GST liability in cash, even though there is a credit available in e-commerce operator. That credit, they cannot use it because they are paying the tax at the rate of 5%. So therefore, they cannot claim the credit. So that is in respect of change in case of e-commerce operators. The next very important is the government works contractor. Sir, the government works contractor, the rate of tax is 12% in respect of certain works contractor. In respect of certain pure services, no material is involved. It is totally exempted. According to the notification number 11/2017. Now what it says, what this notification says governmental authority or governmental entity is removed. So therefore, if any works contract services supplied to the governmental authority or supplied to the governmental entity, now it is taxed at the rate of 18%. Very important is, even if you are providing a pure services, no material is involved. Even if it is exempted under serial number 3 of notification number 11/2017, 3 or 3A. If it is a governmental authority or governmental entity, then also it is taxable at the rate of 18%. So earlier they enjoyed the exemption, but the exemption is continuing in respect of government, state government, central government, local authority. The exemption is withdrawn only in respect of a governmental authority and governmental entity. But central government, state government, union territory, local authority shall continue to be levied at the rate of 12%, or even they be eligible for the exemption in respect of certain services. So that is in respect of government works contract. Now we will go into some important circular also, another 20 minutes. Then we will cover section 129 and 130. That's very important. We will cover it. We will finish it. 151 is not much relevant, but we will cover 129. That's very important. Yes. What is section 129? E-way bill and vehicle interruptions. What is section 129? What is the old provisions? What is the new provisions? Sir, under the old provisions, under the old provisions, in respect of detention and seizure of your goods, when the goods are in transits, you are required to pay. The applicable tax and penalty equal to 100% of the tax payable on such goods. So therefore, under the earlier provisions, the applicable tax rate you have to pay plus penalty you have to pay when the owner come forward, to pay the tax. Now what section says that? New provision, it says penalty equal to 200% of the tax payable on such a goods. So therefore, no tax at all. Now you are required to pay 200% of the tax payable as a penalty. So earlier what happened? I raised the invoice, I collected the tax. Again the officer says, no, there is a contravention in sections. Therefore you pay me the tax, you pay me the penalty also. So therefore this is removed now. Now it says that penalty equal to 200% of the tax payable on such goods. In case of exempted goods, 2% of the value of the goods are 23,000 rupees. Where the owner of the goods come forward. So where the owner of the goods come forward, this is the positions in section 29 new provisions. Old provision is 100% tax plus 100% penalty in respect of exempted goods. 2% of the value of the goods are 23,000 rupees. Under the new provisions, the same 2% is continued, but penalty is equal to 200% of the tax payable on such goods. So this is a new provision. Sir, owner is not coming forward. Who is coming now? The transporter. He is coming forward. Where the owner of the goods does not come forward. Earlier, the applicable tax and penalty equal to the 50% of the value of the goods. Penalty equal to 50% value of the goods. Now it says that penalty equal to 50% of the value of the goods or 200% of the tax payable on such goods, whichever is higher. So penalty equal to 50% of the value of the goods or 200% of the value of the goods on such goods, whichever is higher. So therefore, when there is a contraventions of the provisions of the goods when the goods are moving or when the goods in transits, then in such situations, the new provision says that penalty equal to 200% of the tax payable on such goods from 1/1/2022. If the owner doesn't come forward, penalty equal to 50% value of the goods or 200% of the tax payable on such goods, whichever is higher. Upon furnishing a security equivalent to the amount is payable, you can furnish the securities in respect of the amount is payable in A and B. But according to me in Tamil Nadu and Karnataka, to the extent, my experience, they are not accepting this. They are asking us to pay the tax. They are not accepting the security also. In number of cases, he furnished the security, the officer not accepted. The officer says pay it, otherwise he will confiscate the goods. So therefore, class C is no change at all. Upon furnishing a security equivalent to the amount of payable under class AB in such a form and manner as been prescribed. So therefore, there is a change. Instead of tax, now it is a penalty. Instead of tax, now it is a penalty. Now the next important is, old provision says that the provision of section 67(6) shall also applicable. Now it is being removed. So the provision of provisional release of the goods is not applicable now. So that is omitted. So therefore, the provision of section 67(6). See, some officer what they did, they proceeded under section 129 and also proceeded under section 67(6). They asked us to pay on both. So therefore, in order to avoid that, now that is also removed. Section 67(6) also removed into the new provisions. Now earlier provision it says you have to pay the tax. You have to pay the tax and penalty within 14 days. Within 14 days. If you have not paid the tax and penalty within the 14 days, then the provision of section 130, that is confiscation, is applicable. That is earlier provision. That is the earlier provisions. So earlier provisions. Earlier provisions, 129, what they will do? They will issue the notice. They will ask you to pay the tax. Once if you are not paying the tax within 14 days, then they will invoke section 130. Then they will confiscate the goods. That is the provisions earlier. Now what it says? Now, very interesting. Now the officer says, now the new provision says, no confiscation at all. Section 130, 129 totally delinked. 129 and 130 is totally delinked. Now, section 130 now it's 129 says the proper officer detaining or seizing the goods shall issue the notice within 7 days of such a detentions, specifying the penalty payable. Thereafter, he will pass an order within period of 7 days from the date of service of the notice. So therefore, now no confiscation. The officer will issue the notice within 7 days, specifying the penalty payable, and thereafter pass an order for payment of a penalty. No tax at all. Tax is under the old provisions. No, only he will ask you to pay the penalty alone. So he will also give an opportunity to the dealer to explain his case. The next very important is if the person transporting the goods or owner of the goods fails to pay the penalty within 15 days, the goods or conveyance so detained or seized shall liable to be sold or disposed of, otherwise in such a manner as may be prescribed. This is prescribed in Rule 144A. So therefore, what they are telling now is, sir, I will give you 7 days notice, and then another 7 days I will pass an order. If you are not making the payment within 15 days from the date of receipt of the order, now I have a right to detain the goods and I will dispose of the goods in such a manner as may be required. So therefore, the officer, he has got the power now dispose the goods. Conveyance shall be released on payment of the transporters of rupees 1 lakh rupees. So conveyance he also contravened the provisions of the act. So therefore, it says that on payment by the transporter of a penalty or 1 lakh rupees, whichever is less, he has to pay the penalty so that the conveyance will be released. However, the goods will be disposed of. If the goods is in a perishable nature, then the number of days will be reduced by the officer. So the earlier, what was the position? The earlier 100% tax, 100% penalty, 50%, these that, and then they will give you the opportunity, and then 14 days time you have to make the payment. If it is not paid within 14 days, then the goods further, they will start further proceeding under section 130. That means they will confiscate the goods, and then the proceeding will start. Now what it says that, now the officer has got a power to dispose the goods. That's very important. Against this 129, you can prefer an appeal. Once you prefer an appeal, then the officer will wait. Then it is an automatic stay. The officer will wait. If it is a perishable goods, the officer, even if you prefer an appeal, he will dispose of the goods. So that is a very interesting amendment in section 129. Simultaneously, what they did, they have also amended in section 107. Sir, 107 is related to the appeal. 107 related to the appeal to the first appellate authority. Normally, you are required to pay 10% of the undisputed tax. 10% of the undisputed tax. But in respect of 129 proceeding, you are required to pay 25% of the penalty. You are required to pay 25% of the penalties in respect of appeal. If you want to prefer an appeal, normally you have to pay 10% of the remaining amount of tax which are all in dispute. Earlier I wrongly told it is undisputed. It is a disputed tax that you have to pay 10%. But in respect of 129 proceeding, you have to pay that 25%. 200% of penalty you have to pay. Out of the 25% of the penalty, you are required to make the payments. So that is in respect of 129 and 130. I think with this I have almost completed our importance amendment. Rule 144A, it says how the goods will be disposed. 1 and 15 days time period. and then e-actions, it talks about e-action, it talks about form DRC10 will be issued. So these are all the procedure in respect of detention and seizure of the goods. This is the insertion of rule 144A. So this we have discussed. Amendment section 144, this we have discussed. So I think almost I have covered very important amendment from January 1, 2022. Now we will cover very important, circular, very important circular, another 10 or 15 minutes, so that we will complete the sessions. Now what is this circular? Circular number 35/2021. Circular number 35/2021. What the circular says? What the circular says? Rule 45 is being amended. Rule 45 is being amended. Sir, in respect of a job work, so job work is defined in section 2 subsection 68 of the CGST Act. It says any process or treatment undertaken on the goods belonging to another registered person. So that is a job work. So therefore, for a job work, there is a two parties involved, sir. One is a job worker, the second is a principal. The principal will send a goods to the job worker. The job worker will do the job work and then again send the goods to the principal. Sir, ITC 04 is a form. It talks about what are all the goods is sent to the principal, what is the date, what is the document, what is the CGST, GST liability, what is the value of the goods. These are all the details that you have to fill it up in ITC 04 and you have to file it. And the principal he has to file it every quarter. This is very important form, ITC 04. If ITC 04 is not filed, the department may take a stand saying that it is not a job work at all. Because if you go through section 143, it talks about upon an intimation. So therefore, ITC 04, my view is an intimation. Even the circular also says that ITC 04 is an intimation. So therefore, the ITC 04 is a very important form. So this form is to be filed for each and every quarter. Now, through this amendment, it says, if a dealer aggregate turnover is more than 5 crores, he has to file every 6 months ITC 04. So therefore, furnishing quarterly is not applicable now. You have to file it only 6 months once. If the dealer aggregate, principal aggregate or manufacturer aggregate turnover is less than 5 crores, then in such a situation, once in a financial year, ITC 04 is likely to be filed. So therefore, this filing quarterly return is dispensed now. Only yearly or half-yearly return is required to be filed. It is required to be filed by the principal or by the manufacturer, not by the job worker. This is a very important. The next is in respect of section 77. So this is normally practically it is very difficult. See what happened in one case, the officer came for inspection for 2017-18 and 18-19 in 2020, December 2020. The officer says whatever the tax is paid under CGST, GST is not correct. You would have paid under IGST. Therefore, you pay me IGST now, and then you claim the refund. Sir, this is related to September 2018. The officer verifying in December 2020. So therefore, the dealer paid the correct tax. When he claimed the refund, the officer says, sir, the time period of 2 years is already over because it is related to September 2018. From September 2018, 2 years is September 2020. The audit officer came in December 2020. They pointed out to the mistake. So therefore, I paid the correct tax, but at the same time, it is not possible for me to get the refund whatever the tax is paid wrongly. So this is being represented to the government. Now the government says 2 years from the date of payment of the tax on the interest rate subject. That is the correct tax. When you are making the correct tax, from that the 2 years time period is applicable. So therefore, this is also an welcoming amendment to Rule 89. 1 year has been inserted. Through notification number. The same is also for this is also same. This is not important. clarifications regarding export of services. So the export of services, you have to fulfill certain condition in section 2.6. One of the very important condition is that it should not be a merely an establishment. It should not be a merely an establishment. What the department did in number of cases, even one cases I argued before the Commissioner of Appeal. What the department did, even the parent company and the subsidiary company, they treated as a branch office, and they refused to give the export benefit, and they rejected the refund. So therefore, this is pointed out by the department. So meanwhile, I argued one case before the Commissioner of Appeal that was published in the Taxman publications. The commissioner, the appellate authorities allowed my appeal, saying that the foreign company and the Indian company are two different incorporates. It is not a distinct person. It is not an establishment of one establishment of another. It is a two different corporates. So therefore, section 2.6 benefit is applicable to them. It should be considered as an export of services. This is there are a lot of issues in other parts of the country. Now the government issued a circular number 161. The circular now says very clearly that the corporate incorporated in India and corporate incorporated outside India are two different companies or two different entities. Therefore, the benefit is to be allowed. So this is a circular. This is a welcoming circular. This is very important. Gst rate on external batteries sold along with the UPS system. This circular is to be challenged. This circular says when you are supplying the UPS system, you have to charge battery at the rate of 28% and the UPS at the rate of 18%, without understanding the concept of composite supply. The composite supply, the main supply is a UPS system. The person who is purchasing is interested only in UPS. Therefore, the battery is an ancillary and the UPS system is a main supply. But without considering those concepts, the circular was issued. The circular, I am not agreeing with the circular. The circular is to be struck down. The circular says that even in respect of external batteries sold along with the UPS system, you have to charge battery at the rate of 28 and you have to charge UPS at the rate of 18%. So therefore, this I am not agreeing this circular. The next important is the rate of GST on services provided by cloud kitchen or central kitchen. What is this? Sir, the central or cloud kitchen are also supplying the goods, but they are not providing any services. They are merely supplying the goods through Swiggy or through Zomato. Whether that will constitute a restaurant services or not, because there are a lot of proceedings started saying that the cloud kitchen or central kitchen, they are not providing the services. What they are selling the goods. They are not providing the services. Therefore, they are liable to pay the tax on the rate of the goods, and they are not available for restaurant services at the rate of 5%. Now it is clarified. It says that cloud kitchen or central kitchen is also liable at the rate of 5%. They will also be considered as a restaurant services. When they are selling the goods, when they are providing a services through e-commerce operator, then the e-commerce operator, they are liable to pay at the rate of 5%. Otherwise, concerned restaurant, concerned cloud kitchen or concerned central kitchens, they are liable to pay the tax. The next very important is in respect of ice cream parlors. This circular says these are all the circular is applicable from 1/7/2017, because the government, they are clarifying through circular. Therefore, according to me, it is applicable retrospectively. This circular says ice cream parlors, they are selling already manufactured ice cream. Therefore, what they are doing, they are selling the goods. They are not providing the services. No doubt there are certain services involved, but that is not relevant. Therefore, they are only supplying the goods. So therefore, the ice cream, the rate is 18%. So therefore, the ice cream parlor, they are liable to pay the tax at the rate of 18%. They are not subject to pay tax at the rate of 5%. Restaurant or eating place or joint, they are selling only already manufactured ice cream, and they do not have any character of a restaurant. So therefore, and they are also not engaging in any cooking at any stage. So therefore, they are not subject to rate of 5%. They are liable to pay the tax at the rate of 18%. This is also used to be challenged. The circular is also likely to be challenged. Sir, with this, sir, I have almost completed all very important amendment and the important circular and the issues that is cropping up while conducting an audit by the department. Sir, thank you, sir. Thank you for all of your passion daring. Thank you. Any questions, I am ready to answer, sir. Thank you. Yes, sir.
Hello.
Sir, one question in chat box. Sir, January 22 person can take a credit only if it is reflected in GST or 2B. Yes, sir, you have to take the credit. I told you, with an example. So it is already reflected in September 2021. No doubt it will not appear in GST or 2B because the supply happened in September 2021. But you are receiving the goods in January 2022. It will not be there in GST or 2B. Therefore, you have to explain to the assessing officer saying that it is already reflected in GST or 2E. I have not taken the credit. Now I am taking the credit because I received the goods only in January 2022. Sir, the 2B form is, you can edit, sir. So therefore, you can claim the credit. Yes, sir.
Can we take up the questions, sir, if any? Not. You're done with the presentation. Hello.
Yes.
Sir, can we take up some questions? Have we completed the presentation, sir?
Yeah, I completed the presentations.
Okay, sir. You can stop the screen sharing part. I'll share some questions.
Stop this.
I'll show my screen. Stop it. So is my screen visible, sir? Is my Excel sheet visible?
Yes, sir, visible. Our supplier filed GSTR1.
So next week.
Can we take a credit as per GSTR 2B? Sir, our supplier filed GSTR1. But failed to file GSTR 3B. Can we take a credit as per GSTR 2B? Sir, it is appearing in GSTR 2B. But whether the tax has been paid by that person or not, whether the tax has been paid by that person or not, that also one of the condition, correct? So therefore, that also is required to be fulfilled. So therefore, if the person is not at all in existence, then in such a situation, the department, may ask you to reverse a credit. May ask you to reverse a credit. The next question. With effect from January 2022, person can take credit only if it is reflected in GST or 2B. Then how can he take a credit in January 2022? For this is I explained, sir. This is I explained. What about fees charged to member for Rotary clubs? Sir, there are certain advance ruling also says that Rotary clubs, they are liable to pay the fees charged to members. 3 or 4 advance rulings is there, sir. So therefore, my view is it is only a supply. So therefore, liable to pay the GST, sir. Liable to pay the GST. Next, SCN through email or sent to taxpayers in QRMP for failure to file a monthly GST or 3B return or without DIN, and there is no reflection of such a SCN in a website. Sir, all you point out saying that it is not, no DIN is there, therefore it is not a valid GSTN, all which you have to point out. And you verify whether it is a genuine SCN. Sir, next. So there are a probability that the department will allow to amend GST or 3B. Sir, until Supreme Court bar the Airtel. So it is not happening, sir. So therefore, amendment in GST or 3B of a particular month is not possible. You can change it in the subsequent month only. What is exemption limit of turnover for job worker? Sir, job worker is only 20 lakh rupees, sir. Only in respect of your goods. And provided if the dealer is dealing only in exclusively in supply of your goods, the limit is 40 lakh rupees. Otherwise, the limit is 20 lakh rupees. Whether all the government contractors are taxable at 12%, what are the contractor responsibilities? Sir, if you are providing to the government, very important, if you are providing to the government, central government, state government, local authority, union territory, then there is no change at all. But if you are providing a services to the governmental authorities, if you are providing a services to the governmental entities, then the tax rate is increased from 12 to 18% and exemption from 0 to 18%. So therefore, you have to check whether you are providing a services to the government or to the governmental authority or to the governmental entity, and accordingly you have to discharge your liability, sir. 18% on ice cream sold by parlor. Do they receive the ice cream from manufacturer on 5%? Similarly, food bought at 5% from caterer can be supplied further at the same 5%. Yes, sir, that is possible. So if you are purchasing the food at the rate of 5%, you can also supply at the rate of 5% if you are a restaurant. Yes, you can do it. You are not eligible to claim the credit. But manufacturer of ice cream, they are charging only at the rate of 18%. So therefore, they will receive at the rate of 18%. But they are paying at the rate of 5%, saying that we are also eating joints. We are also a restaurant, like we are providing services. So that is being his rule. That is being his. Why is there is a deviation between Gstr 2A, Gstr 2B? Yes, sir. Always there will be a difference between Gstr 2A and Gstr 2B. Gstr 2B, if it is reflected within the due date, if the supplier filed the return within the due date, then only it will come in Gstr 2B. But in Gstr 2A, it will change automatically. Even if your dealer file after 6 months, it will come into the consignment. Say for example, July month return. If the dealer is filed in January 2022, in January 2022, Gstr 2B it will appear. In July 2017, it will appear in Gstr. Sorry, 18 it will appear in Gstr 2A. So Gstr 2A, based on the invoice date, it will go into the particular month. Gstr 2B is based on whether the supplier is filing the return within the due date or not. If he is not filing, then it will go automatically in the next Gstr 2B. Gstr 2B won't change. Gstr 2A, it is a dynamic, it will change on each and every day based on the supplier filing the return. Is RCM is mandatory for a registered person? Since there is no use further GST provided to use input tax rate, sir. That is why I explained section 22, 23 and 24. Even if you are a dealer in exempted supply of goods or services, even if your goods or services are totally exempted, but if you are liable under reverse charge mechanism, then section 24 is applicable. You are liable under reverse charge, you are liable to get registered, and you are liable to pay the reverse charge mechanism, and you cannot take the credit because you are dealing only in exempted supply of goods. Therefore, you cannot avail the credit. In case of any deviation between books and GST, is it sufficient the deviation be corrected in GST 9 to mention in the new turnover declaration methodology in the GST portal? Sir, if you are able to file it before September due date, you correct it whatever, and then you effect those changes in GST 9 and NC, that is sufficient. That is sufficient. So if you notice the mistakes after September, then you please enter the same correct figures in GST 9 and 9C and accordingly prepare your reconciliation statement. Can RCM paid on GTA services on the purchase of exempted goods claim it as input tax? Sir, you cannot claim, sir. What you are dealing in only in exempted goods. So therefore you cannot claim the credit. You cannot claim the credit. You cannot claim the credit.
Monica, over to you for vote of thanks.
I think I have answered all the questions, correct, sir?
Yes, sir. We have took all the questions. Thank you, sir. Thank you so much.
And thank you from SIRC
for giving me an excellent opportunities and members for the patient hearing. Thank you for all of your patient hearing. Thank you, sir. Thank you.
And on behalf of SIRC and our chairman, from Monica myself, thank you for the session, sir. And I would give you a special thanks for accepting our invitation and taking the session today. And thank you so much for your time, sir. Thank you once again.
Thank you, sir.